Good morning, Anthony Franco. Did you know in 1913, right about when you were born, Anthony, the first U.S. federal income tax form, the 1040, was just 3 pages long. Today, the IRS tax code spans over 70,000 pages, leaving most business owners completely overwhelmed.
It's totally fair. It has your best interest at heart, Chris.
Well, when you were born in 1913, it did. So that's yet the secret to thriving under this complexity isn't avoiding taxes, it's mastering the rules. With the right strategies, taxes can become an opportunity, not a burden. We have a guest today, Anthony. Joining us is Morgan Q. Anderson. Among other things we're going to find out today is, what does the Q stand for in Morgan Q. Anderson, EA, a fearless tax lawyer who spent over 25 years taking on the IRS and state tax agencies to resolve thousands of personal and business tax debt issues. Author of Tax Debt Rule Number 1, There's Always a Solution. It's Morgan's mission is to demystify the tax collection process and prove there is no debt problem too big to tackle. If you've got tax troubles, buckle up, buckle up. I like that one. It's a good Texas thing. Buckle up. Morgan's here to share her experience. Morgan, welcome. Thank you so much for being here today. Let's throw you a softball. Why does this matter? Why do I, as a founder, need to consider tax planning and tax issues as part of my journey here? I got a TurboTax. I got Turbo. It should be fine, right?
If there are 2 words that make all of us in the tax industry cringe, it's self-prepared.
Fair
No, as business owners, there's a simple concept to understand. Every expense that you can claim against the income you earned minimizes your tax burden, right? And that's why paying attention to your finances throughout the year and working with a really good CPA or enrolled agent who knows your business, knows the ins and outs, knows how everything maneuvers and how everything moves through your business, they can help you make pivots throughout the year to implement great tax strategies. Because let's think about this. Trump, or President-elect Trump, right? He probably has a team of like 100 to 150 CPAs, and their sole job is to manage all the finances and to position him and his businesses in the most beneficial tax position possible. We all can do that as well, not at the same degree. But if we're savvy business owners, there are all these tax strategies that we can implement that will position us in the most advantageous way possible, legal and advantageous.
I think it's probably one of the biggest things just right off the bat, which is the only time that I, as a founder, would think about taxes is the absolute worst time to think about taxes, which is after the year has been closed. I didn't do any advanced tax planning, and I know it's cost me a ton. I'm looking at stats here that just makes me crazy, but it's probably less than what I ended up doing. It says the average small business owner overpays $11,000 annually due to poor tax planning. That's from the Small Business Association. So set us up here, like just from a general perspective, when do I, as a small business owner, like as a founder, as I'm starting a company, when do I need to start thinking about this?
I would start thinking about it before you open your doors. Find your trusted CPA, enrolled agent, somebody who has handled your similar type of business in the past, so they know what they can warn you about, right? They know to tell you, hey, for expenses that you may be thinking, here are some things that I know you will definitely be able to write off. Here are things that you shouldn't even think about because you don't qualify. A lot of people are like, oh, well, I bought a wardrobe because I'm an attorney and I have to go to court. That's not necessarily a write-off expense because you can also wear it outside of the courtroom. You can wear it in your personal life, attending a funeral, going to, a family reunion or
So
something.
the $5,000 I bought for these cool glasses, those are not. I can't write those off.
Because you
Damn
use
it.
them at home with your family, right?
Oh
But
God, I do get made fun of by my family as well as Anthony when
what?
it comes to this
I
thing.
like them.
Yeah, Anthony, talk to me about so as you were starting a company, when did you start considering tax planning? I screwed this up every single company I've ever started. What about you? Have you had any experiences here?
Tax planning is really easy if you don't make any money. So I've never had to worry about it. No. So I think Morgan kind of nailed it. So of course, Chris, you and I have started companies where we haven't thought about planning for tax up front. And I actually wonder, we talk about this all the time, Chris, where you over plan stuff before you get started. And I'm wondering, I'm a little curious to take the contrarian point of view right out the gate. Are we putting the cart before the horse? Like if you're tax planning before you have revenue, maybe you should be focusing on revenue first. And it's one of those things that it's a happy problem that you have a tax problem your first year because, hey, that means you made money.
Right.
But I agree. There's some certain things that you can do up front. Talk to your CPA. The thing that I wish I understood a lot deeper, and this is after years of selling online, is how complicated it is to plan for taxes when it comes to sales tax, especially if you're selling on something like Amazon or e-commerce. That's the thing that really has bitten me in the rear before. The word I was looking for, Morgan, was nexus. So you establish nexus in certain states. Anyway, that's a whole rabbit hole we don't need to go down. But the planning part of it, I just would love your thought on. Maybe are we putting the cart before the horse just a little bit?
So, and that's an interesting position to take with it. I can appreciate because, boy, when you're looking at creating a business on paper, you can get into this point where you're driving yourself crazy trying to do the what ifs and things like that. But there are simple tax things that you should keep in mind in the beginning, like what kind of entity should you register the business as? And that's something that your CPA or EA can help you with. Sales tax is another really important thing to understand based on whatever you're selling. What is your obligation? Because every fiefdom, right, every county, every state has their own sales tax laws. I was just reading something about, here we are getting ready for Christmas, and there are some states that tax live trees with an extra tax. There are some states that it's really funny. New York, they tax a bagel in a bagel shop differently if it is whole or split in half. I mean, who would think of who would make this stuff up?
Right. Yeah, but
Some
it's
states have like
super simple for founders. You shouldn't worry about it.
yeah,
Jesus.
right. In Alabama, there's a tax. If you sell a deck of playing cards, there is a separate tax on that. I mean, and
As
this
well,
is
there should be those degenerate gin rummy players, people playing bridge.
out by the moonshine still.
Exactly. That's exactly
What do you
right.
install for?
Yeah.
My canasta deck of cards, I didn't properly charge.
Yeah,
Goodness.
there are some
Crazy.
bizarre taxes out there. So, as you're getting ready to open your business, these are the things that your local professional can really help you with.
It's such a good point. And I didn't even understand when I started my first business. I had heard about keeping my business expenses separate from my personal expenses, but I didn't really make sense to me. explain it. Just start from the very, very beginning. For me, as somebody that's considering opening a business, I might be going to the library. I might be going and buying a book on this stuff. What should I just be keeping in mind about business expenses versus personal expenses? And how should I think about that in context of tax planning?
Well, you always want to implement best practices that are the easiest way to keep track of everything. Again, every business expense that you can count against that gross income you earn or you receive is going to minimize that figure that you're charged income tax on at the end of the year. By keeping everything separate, as a sole proprietor, things tend to get really commingled. Like you were saying, why am I keeping all of this separate? Well, how many times, like, let's say, for example, somebody who is doing home renovations, right? Self-employed. People hear about him from word of mouth, realtors in the area, et cetera, et cetera. And he goes to Home Depot and that's where he buys all of his expenses. So he's like, oh, well, every Home Depot receipt that goes through my personal bank account is for these jobs. Well, how do you know it wasn't for something you bought for your house or buying salt for your personal driveway? I mean, there are so many bad habits that people get into with record keeping that really works against them, because when the accountant at the end of the year, usually we call these shoebox people, right? They show up to their CPA's office with a shoebox of receipts and go, here you go. It's March 15th and my tax return is due in 30 days, right? Like, oh my gosh, you're setting yourself up for a world of hurt. What was this receipt for last January? I don't know. If you keep everything separated, like use one credit card for all you sole proprietors out there, use one credit card for all your business stuff and have a separate bank account for all of your business activities. So much easier to separate what was business, what was personal. And then if you get audited, God forbid, and they say, well, where are these receipts? Well, it's out of my personal bank account. And well, most of the Home Depot were business, but I don't know, there were a few personal. You're just muddying the waters and potentially causing big problems later on down the line.
Anthony, what type of shoebox did you use early on? Was it a Nike shoebox? Was it a
Puma.
No, I'm writing down that I should be saving my receipts, so I don't even have a box yet. This is all good. This is all good information.
Terrific information here. So, talk to me about in that idea phase.
Mhm.
I don't even have a business yet. Should I be saving receipts? Should I start paying attention to these expenses?
Yeah, absolutely. And in this day and age, a desktop scanner costs what, $100? So just scan the receipt and put them in a file folder on your computer. And at least then you have a record somewhere, because receipts, they fade out after a while. If you don't write down the info, you're like, what the heck was this for? I can't even read it. If you don't have the receipt, you shouldn't claim the expense, because you always want to CYA when it comes to dealing with taxes, just in case you do get audited.
All right, Anthony, we need to end this podcast and I need to take a picture of a lot of receipts, apparently, is really what this is coming down to at the moment. All right. So we've got the fact we need to have a tracking mechanism in place early on. Use a single credit card, just do some sort of basic tracking of expenses before we do, legal entity, talk to somebody about your business, give some advice there.
Correct.
In those early phases, what other advice do you have for the early stage founder just getting started, just getting revved up?
If you think your first 6 months of expenses are going to cost you $50,000, plan on 75.
Great point. Yeah.
Seriously, you want to be ahead of the curve. Always add an extra 50% to what you think you're going to be facing, just in case. find a great CPA or enrolled agent that you feel comfortable with. The way I always encourage people to think about their CPA or their trusted tax professional is it somebody you're comfortable with? Can you call them out of the blue and say, hey, I need to talk to you, and hear back from them within a day? Is it somebody who says, okay, let me understand what kind of business you're looking to start? If they don't show interest in you from the get-go, it's probably not somebody who's going to really sit down and contemplate all aspects of your financial condition. So really ahead of the curve, overestimate how much your expenses are going to be, and find somebody that you're comfortable with, thinking of them as almost like a member of your board, right? Every time you're making a big financial decision, you want to talk to them because they may have a different way they want you to approach it to benefit you in the long run.
A lot of the fear that I hear from early stage founders is they don't want to go talk to a lawyer. They don't want to go talk to an accountant because they think it's going to cost them thousands of dollars
No,
to go have that conversation. You want to alleviate some of that fear?
you bet. Absolutely. Usually your CPA or your enrolled agent that you work with can open the business for you. They can do all that state registration and everything else. Um, and it's usually maybe a couple $100.
Yeah.
If somebody's looking to charge you $1,500 for doing all this, you're in the wrong place.
Got it. Okay.
There's all those like legal Zoom groups online and everything. I'd shy away from those just because it's a mill,
Yeah.
right? They're not thinking about you and your unique needs. It's a product they're selling. So yeah, I would
So
find
mental
somebody
note to go fire my accountant. Appreciate that. Now, okay. Anthony, what's the worst startup story you've heard as far as screwing this stuff up early? I've
Well,
certainly had.
I want to dig into that a little bit. It's a perfect question, Chris, because I know a founder who was profitable on paper
Mhm.
but had no cash and no taxes at the end of the year.
No taxes is in like no money to pay taxes, or
yeah,
no tax liability?
he had no money he didn't have the cash in the bank to pay the taxes that he owed on his on paper profitable business, but it was accrual basis profitable, but cash basis not, and he wound up in debt. I'd love for you to talk. I mean, have you seen that, Morgan?
I've seen that, but there's a lot of factors that go into personal income as well. Like if your business is paying your health insurance and paying, covering all kinds of things. Like let's say if you're a single member LLC or a sole proprietorship and you're putting business expenses on the credit card, right, in your personal name, and then you're paying the credit card payment from your personal or from the business to your personal card, all that
It's
interest,
income.
it's like it comes to you. It's looking as
Yeah.
personal income because you wrote off the expense when you charged it on the card. And sometimes people get behind in that cycle and it creates an income that isn't truly going into your pocket. Accrual basis. Well, because here's why, right? Your income is considered when you create the invoice. And the hard part is, and we all know it, for anybody who's dealt with invoices, it could take you 60, 90, 120 days to collect the money. But at the end of the year, if you're sending out all these invoices, it's like I got 60,000 invoices that went out December 15th.
Maybe dive just to give
Right?
a really brief description between, QuickBooks, you have the cash versus accrual button, and you can switch back and forth. But really, what does that mean just at a high level for founders? What's the difference between cash and accrual?
You have an
Accounting.
hour? Honestly, I mean, it's so I deal with just cash basis. The IRS looks at cash basis when they're looking at collections. There are a lot of companies where it benefits them to look at everything and handle everything from an accrual basis. It really depends on the industry you're in and what you're led to do by your accountant. So it's a little too deep to get into at this point, but it
Just
comes
at
from
a high level, right? Cash is
income and expenses on paper versus what is actually coming into the bank account and what is going out of the bank account.
Yeah, and there's a certain stage where you have to switch to accrual, isn't there?
There, I am not on the tax advising side.
Got
I
it.
deal more with just tax debt and basic business principles leading into that. So, I mean, that gets into some higher level CPA involvement.
But for most small businesses, let's just pay attention to cash. Pay
Cash.
attention to cash is probably the right thing.
Yep.
All right,
For all kinds of reasons.
I've got a stat here that is, I think, accurate, which is says over 70% of entrepreneurs cite tax planning as significant stressor. This is the National Association of Small Businesses do this. I certainly was stressed out about taxes. I know that it's a huge stressor in people's lives. What can we do as founders to start alleviating some of that stress along the way, knowing the fact that our lives are crazy? Asking us to sit down and plan for taxes is like asking us to go get a teeth cleaning. It's not on the top of our list, but at the same time, it is critically important. What advice do you have for founders just to help alleviate some of the stress?
Well, I think demystifying the tax obligation, right? So let's think about why we have to pay taxes. First of all, take it a step back even further. So, what do taxes fund in our society here in the US, right? Our roads, our public schools, Social Security, our military. When you think about everything that our tax dollars do go to pay towards, that we all benefit from on a daily basis, it's like, oh, okay, so this is community money that goes into expenses for the betterment of our country, of our citizens, of the people who are here, right? So demystify the ugliness of the word tax. The second thing is that by tax planning, you are actually taking a power position with the finances of your business. I know it feels like going to the principal's office or going to get your teeth cleaned or, having bamboo shoots shoved under your nails.
I wasn't going to go that far, but yeah, I mean, it can be painful.
Some people have really high anxiety about it, right? And they feel like their tax professional is going to judge them for financial decisions they made. They feel like they're going to judge them for getting into credit debt to keep their business going through a slow period. There's a lot of defensive positions that come into play when you're kind of getting naked in front of somebody financially and saying, okay, what do we do with all of this? Right. And there's this vulnerability people feel, but man, you should look at your tax professional as your ally. They are your advocate. They're the ones who are going to say, you know what, in this coming year, I think we need to pivot this way. And here's why. And here's how it's going to help you. It's going to help you build credit. It's going to help you minimize your tax burden. It's going to help. If we dig into why some of your expenses are out of alignment with what it should be right now, I'm going to bring your attention to leaky holes in your money bucket. Right. And this is the kind of relationship you should lean on your tax professional for.
I want to ask you both a question and starting, what sort of question should I, as the founder, ask a potential tax CPA, EA advocate? How do I know? I hired the person I kind of knew from down the street, and turned out that person wasn't really was more interested in doing other stuff than really helping me. What sort of question should I ask to know whether or not I can trust that person?
Anthony, do you want to field this first, or you want me to keep going, Chatty Cathy?
No, keep going. Yeah, I would love to hear your perspective on it.
Okay.
So I in reality, Morgan, here in Colorado, we have a CPA shortage.
Yeah.
It's hard for small businesses to find so it's almost like we're being interviewed as founders versus the other way around, right? Does the CPA want to work with us? We don't have the pick of the litter. We're out hat in hand asking for a CPA, asking for a professional here. So I don't have anything. It's like, will you be my CPA? Is the only question. It's the only question I can think of.
It's like showing up with a rose in your hand.
Yeah, exactly right.
Yeah, no, and this is something that has been a hot topic across the nation with, I'm part of the Utah Association of CPAs and the National Association of Tax Professionals, and the lack of competent help that we can find right now is a big challenge. That being said, there are thousands of CPAs. I would expand it beyond just the certified public accountant and also consider enrolled agents. Enrolled agents are a little different because we take a similar exam that CPAs go through, but it's proctored by the IRS instead of our local state. Okay. So we are known as tax experts at the federal level and recognized as experts at the state level as well. Whereas CPAs, they're recognized in the states that they're registered in and that they're licensed by. So it's a little different, and EAs are getting more and more notoriety right now as being tax professionals that are on an equal footing with CPAs. It's just not as widely known license. The difference is CPAs can sign off on audits and EAs cannot. It's not that they can't represent through an audit, they just can't sign off on like an internal audit. That's why all the Fortune 500 companies have CPAs that head up everything internally, because they can sign off on all of that. But there are thousands of EAs and CPAs across the nation, and a lot of founders, you don't want to go to the big CPA firms. They charge 2 and 3 times per hour for the same work that a local one-man shop will do. What you want to do is make sure they're licensed and they're in good standing, right? You can go to the IRS website and look that up, or the state CPA board, Board of Accountancy. You can look at their registration, their roll call, and verify that. The second thing you want to do is pick up the phone, call them, call a couple of people and say, I'm looking at starting this business, or I've got this business. I've been involved for 3 years. I haven't had the best relationship with the CPA I was working with. I'd like to talk to you about moving over to you. Can you pencil me in for an hour? And just have a conversation with them. Another great place to go to is turn to your network. Talk to your business buddies. I mean, we all know them, right? We belong to chambers of commerce. We belong to networking groups. We know other people in business. Hey, you've been in business for a long time. Who do you use to manage your books? How are they? Are you comfortable with them? What do you find with them? What are some of your challenges? Do you feel like they show a true interest in you and your business when you meet with them, or are they just pencil pushers filling out a form and they move you along? Because that's what you don't want to be involved with.
So I get in front of it. I go out to my network. I've found a few. Should I look for 2 or 3? Probably.
Yeah.
You don't want to just look for one. Okay. So I've found a list of 2 or 3. What sort of questions should I ask? I hear you here, which a lot of it just does come down to trust personally.
Mm-hmm.
But guide me in some of those questions that are really great questions for me to ask to understand how they think and approach tax planning.
I would say, again, this comes down to can I talk to you? Can I meet with you for an hour? And that's something that you're just going to have to commit yourself to doing. And it can be on the phone. It doesn't have to be in person, but say, okay, I've got a business. Here's how long I've been involved, or how long it's been open. Here is the type of entity it is. Here's what my gross income every year has been. This is what I'm looking forward to for the next few years. Here's what I'm forecasting, just, spitballing numbers. I'm looking to work with somebody who can get involved and help me make tax strategy pivots along the way. What would you recommend my first step, based on your experience, not seeing my books directly? What would you say my next step should be? What are some things that I should be looking at? And listen to the conversation. I mean, I know this sounds really general, but until you're talking about your specific business, it's kind of a general guideline at this point. Another question you can ask them is, I'm in a service-based industry. Have you had a lot of experience with service-based industry? I manufacture a widget. Have you worked with a lot of manufacturers? I run a restaurant. Have you worked with a lot of restaurants? You will find that people tend to stick to two or three areas that they are really good at. Like, I have some people who cannot stand e-commerce, won't touch it. It's
I
too
know
much of a
why.
headache.
Yeah,
Yeah,
And
it
right.
is such a
yeah,
headache. Yeah.
I have a couple of people. I have a network of professionals that I've met across the nation. I've got a couple hundred people, and I keep tabs on what they do, because when people come to me, a lot of times they come to me and say, I haven't filed for a few years. I've been running my business. I've been kind of keeping my head down and I'm scared. Do you have somebody that you can connect me with? And I'm like, okay, let's start with the industry you're in. And then I go through my network list and say, I've got 2 people across the nation who love e-commerce. That's what they specialize in. I've got a couple of people who specialize in the marijuana industry, because there are so many regulations around that. I've got a lot of people who love construction who don't like restaurants. So finding somebody who is comfortable dealing with your industry as well, is going to be a key factor.
What does the
I'm
Q stand for
curious.
in your name, Morgan? It's
Q.
time.
Quanti.
Quanti.
Quantee. Yeah, it's my grandmother's
Okay.
maiden name.
It's a beautiful middle name. That
Thank
is
you.
terrific.
Thank you.
So Chris, I have a question.
Sure.
One of the things that's fascinating about taxes is you can have an attitude towards filing taxes that is unique to your personal appetite for risk.
Mhm.
Like conservative versus aggressive. Do you have an opinion on how to handle, like, doesn't your CPA or EA need to kind of match your attitude towards taxes? Or can you direct any CPA to say, I want you to be more conservative, or I want you to be more aggressive?
It depends on how aggressive you're wanting to be. If you're trying to commit fraud on your tax return, every CPA or EA is going to say no. Or if they say yes, that's probably a sign you shouldn't be working with them.
Maybe that's a good question. Are you willing to commit? Are you willing to
Right?
commit a crime, and maybe
Yeah.
you step away?
So my guideline,
It's terrific. Now then you're going to have a knock on the door. Like,
right, Mr. Franco.
yeah. Right.
No, my guideline is, you don't want to be a saint, but you don't want to be a sinner, right? There's this balancing act. There are a lot of self-employed people who go out to lunch with a friend and they say, okay, let's talk business for a few minutes because I'm going to claim this lunch expense as a business expense. That's fine. Don't be egregious with it. Don't go out for $1,000 steak dinner every other week and try to write it off as a business expense. That's going to throw up red flags all over the place. But work with somebody who isn't, pencil pushing, uber conservative, because they're not going to be thinking outside the box with even giving you guidance moving forward. Like, so I'm an EA, right? I am licensed to do anything in the tax world that pertains to me and my business, but I have an accountant, an EA who I trust, who's been handling everything since day one, because doing tax strategy and stuff isn't my area of expertise. I handle tax debt. So I get with her every month and we talk about where my business is and what we're doing and pivots that we want to make. And she's always like, do you have any meal expenses? Like, can you give me some more receipts, please? And I'm like, oh yeah, that's right. I forgot I did this and I did that. They should be prompting you.
One more question, and then let's go to speed round. You do
Okay.
specialize.
I got one more question too, Chris. So 2 more
Okay,
questions.
so 2 more questions and then speed round.
Go for it.
You've mentioned about tax debt. I
Mhm.
do know founders that have gotten into trouble. They haven't filed regularly. They don't have the money. They skip the payment, etc. There is a lot of fear and maybe even shame in those moments. What advice would you give a founder in that scenario?
That's everybody that comes to me. Everybody who comes to me has a tax debt issue. So I'm really used to this psychology of like what they're feeling. They feel anxiety, fear, shame. And I'm the first one to say, don't let it have power over you like that, because it's just another bill. There's always a solution to it. Don't hide from it, because penalties and interest keep mounting and it becomes like a runaway freight train if you don't stand tall and say, okay, I've got to address this. There's always some way to handle it. I just need to get it done. The moment somebody is in that position and they bring on a professional who specializes in that and says, okay, I got it, I'm going to sign on as power of attorney. Follow my lead. I'm going to lead you through this. They all take this big, deep breath of like relief, right? Okay, somebody's going to guide me through this. In 25 years of handling tax debt, I have never had a case that couldn't be resolved, ever. There's monthly repayment plans. There's programs where the IRS in most states will say, you know what, you're paying your current taxes, but you have no money left over to pay this old debt. We'll put you in an uncollectible status for a year and let you kind of get your feet under you. There's settlement programs. There's leveraging equity and assets. There's all kinds of ways to solve it. You just need to work with somebody who knows what they're doing and knows every option available and how to evaluate your financial condition the way the IRS in the state does.
Yeah.
So,
and do that sooner than later. Don't wait.
Absolutely. Don't bury your head in the sand like an ostrich. It does not help you.
Okay, Anthony, last question, then we'll go to speed round.
That was you asked the same question I had. So I'm golden.
Yeah, we're starting to share brain. All right, I'll just ask you a bullet points, obviously no names. Give me just one
really quick. If you're gonna share a brain, don't share a brain with me or Chris.
But it's entertaining. How about a Friday night over a beer, right?
It is pretty fun.
Maybe that.
Give me a story of a founder or somebody like, came in 5 years behind, stuff like that. Just bullet points of a story that sticks out in your mind.
Bullet point. Had a realtor come to me. Owed for 4 years, $180,000, wasn't compliant with current taxes, got him compliant, ended up doing an offer and compromise, settled at $14,000.
That's amazing. All right.
Wow.
Mm-hmm.
Here we go for speed round. 4 founders. Again, we'll give you the opportunity to say it's too complicated or pass, whatever. Deduct now versus later. Should founders prioritize immediate deferred deductions, or should we wait?
Pass.
Is it ever okay to handle your taxes yourself?
Only if you're a simple W-2 employee of somebody else.
Got it. In my capacity, growth versus stability, should my tax planning focus on scaling up growth in the future, or should I focus more on that incremental steadiness?
Both. Both.
Very good.
You always want to look at short-term and long-term.
This one, I feel like it's a layup because we've already talked about it. Should I prioritize tax saving versus audit risk? Where should I be thinking about that as a founder, as far as the level of risk I'm willing to take on? Like risky, not risky.
If you plan appropriately, you can take a little bit of risk without threat of audit.
Beautiful. All right. That was a good round. Anthony, great conversation today. What did you learn? Give us your bumper sticker moments from the conversation.
Yeah. So the first bumper sticker I have is I need to start having $1,000 steak dinners every week and write them off weekly.
It's like, who has $1,000 steak dinner? Jesus, I want to be in that business.
All right.
And don't forget to invite me.
Yeah. Well, great.
Exactly. If you invite your tax professional, it counts as a write-off.
Yeah, there you go. Yeah.
Business meeting.
Yeah. I find it ironic that you can actually write off your tax expenses, your tax planning expenses. Anyway, so the things I have is plan early, start tax planning before you think you need it. Use separate accounts, really basic thing. Use separate accounts, personal and business, keep personal and business separate. There's all kinds of, not just tax reasons to do that. you can get in big trouble combining personal and business that are outside of taxes. This is one of those areas where DIY just does not make sense. So you cannot, the tax regulation, there's 70,000 pages in the tax code, and it's being added to every year. So there's no way you can keep up on your business and on the tax code. You need a professional to help you through this. And if you get in trouble, call Morgan. She's going to handle it for you. And then the last thing, track every dollar. Just every expense should be tax savings. Just put it in. Those are really basic things that I think a lot of founders actually don't do.
I think the only thing I would add, Anthony, is that I didn't do this, is that the first year before I started my company, I did so much work. I bought a computer. I did all this sort of stuff. I didn't think of those as business expenses. I thought I had to have a LLC filed with the Secretary of State before I could start tracking my business expenses. And that was a complete miss on my part. Great conversation. Morgan, where can we, so deep dive first, just a couple for you today. There's a podcast called Proactive Tax Planning for Entrepreneurs by the Wealth Ability Show. Top tax planning tips for small business owners. There's an Inc. article. And of course, Morgan, talk to us about your book. Where can we find you? Where can we get connected?
Yeah, Tax Debt Rule Number 1, there's always a solution, is on Amazon. Go online. Let your fingers do the walking. Golden Lion Tax Solutions. You'll find me there. You'll find me on Facebook, LinkedIn. We have a library of over 100 blogs. And I promise, just like my personality, it will not put you to sleep. But there's all kinds of resources there for you to tap and look into. If you have a tax issue, if you're looking at tax planning, go to my website, go to our blog library. There's so many wonderful topics there. Reach out to me. My email address and my direct number are on our website. Be happy to speak with anybody who's got a question.
How often should I be meeting with my tax planners in the first year in business?
Quarterly.
So not every 3 years. Okay, got it.
No, and do not show up 3 weeks before the filing deadline.
Oh, yeah, that's typical. Okay, there's a few takeaways for me, Anthony. Great conversation, Morgan. Thank you so much for joining us today. A lot of really good stuff in here. And the number one thing you said is that we don't have to be stressed out about this as founders. We can.
Don't be intimidated by it. Don't give it that power over you. Right? Be the boss of your own business. Chris, Anthony, thank you so much for having me. It's been a real pleasure.
You bet.
Thank
Anthony,
you, Morgan.
What do we have coming up? We have 700 shows in the next 5 days, I think.
Coming up, we have we have lateral this notion of lateral mentoring. So finding peers as mentors. So I'm really looking forward to that. And we have a guest, Deborah Heiser, on it. Make sure to follow us on YouTube, subscribe to us on YouTube, hit that subscribe link there. And just go to howtofounder.com to figure out where you can listen to us and where you can subscribe. Tell your friends. Thank you so much for tuning in.
Thank you for listening. We appreciate it.
Thank you very much.
Happy holidays. This is
Happy
great.
holidays, guys. We'll talk to you next week. Thank you, Morgan.
Thank you.